How's it going, everyone? It's Sam. We're talking about NAT today, and they just released their third quarter earnings. I'm going to go over that. I'm going to go over whether I am buying or not because I did sell out the stock when it was around $4.15. I came out about even on it. Now it's at $3.22. It's moving up today after earnings. So thank you guys so much for clicking on this video. Please hit the like button too. It really does help out the channel. Nordic American Tanker is a stock that I like to talk about, but not a lot of people really care about it anymore, but I still like to cover it every once in a while. So if you like it, hit the like button. Also, if you want some free stocks through WeBull, you can check out the link down below. You can get some free stocks through WeBull if you deposit $100. So thank you guys for doing that, and let's get into it. So NAT is up partway through the day today, and this is on Monday when I'm recording this. You might not see until Tuesday, but they are up, starting to move up throughout the day. They were down pretty significantly at one point, and they've moved up about 5% from their bottom so far. Now, let's take a look at kind of what's been happening with the company because there has been some news. First of all, their CEO and founder released this a couple days ago. So on November 6th, he said, "Dear shareholders and investors, we received many comments and questions regarding the market for our Suezmaxes. They have 2 new builds and then the 25 overall. NAT is in a positive phase of development. There's been a certain lull in the market recently, which we regard as a short-term phenomenon. A company can go 3 ways, sideways, downwards, and upwards. NAT is solidly on its way upwards. Our results are out Monday, November the 16th. Dividend is a priority, but a reflection of earnings, as it has always been. Good weekend." So kind of a mixed bag there, right? I mean, that's kind of just a weird comment about how companies can go sideways, downwards, and upwards, and NAT's upwards. Based on their earnings today, it does not seem like they are upwards. We'll take a look at them here. Just going through some of the main points here. The time charter equivalent for our trading fleet during the third quarter was $25,000 per day per ship. In perspective, this is the best third quarter TCE result for many years. They don't really say how many years there, but if we just look at their earnings over a year ago, they had about 32 million in revenue. They had a little bit more than that this quarter, which we'll go into in a second. As 2020 draws to a close, we see far less uncertainty in the marketplace. They expect some positive fundamentals going forward. Cash dividends are a priority for NAT and reflect in our earnings. In 2020, we have paid $60 million or 41 cents per share in dividends. With this report, we announce our 93rd consecutive quarterly dividend. The dividend for Q3 2020 is 4 cents per share, payable on or about December 15 to shareholders of record December 2. This represents an annualized yield of 14% on today's share price. Overall, they had a net income of negative $10 million and an earnings per share of negative 7 cents. We'll show their revenue here in a second as we go further down. Their long-term liabilities as per September 30 stood at $313 million, a reduction of more than $63 million since year-end 2019. Our net debt is $255.4 million or $11 million per ship. They announced recently 2 new builds coming. They say here that the current cash position is about $70 million in cash. They have about $13.2 million of their long-term debt that is current. And the last thing that I want to hit on is that their revenue was about $37 million compared to $32 million last year on this time. Now, something that I don't love, I realize that they are a company that focuses on their dividend, but they lost $10 million this quarter. I don't think they should be paying out a dividend, really. I mean, I think they should conserve that because right now they do have a lot of debt. They have a lot of long-term debt. They've been buying more ships. I think that just making sure that they are in a stable position is more important, and they did reduce the dividends, but I think that paying 4 cents doesn't really affect too many people, and it could help the company. Now, looking at the last couple weeks, they have had very low numbers, so this is not necessarily NAT's rates. This is a tanker market report, and this shows Suezmax, the type of carrier that NAT has, what they're getting on average. So last week they got $5.8 thousand per ship per day. So that is not a good amount. I mean, it costs about $8,000 just to run these every day. So right now they are losing money. And if we just look over the last, over the last couple months here, this is 2020 in blue. It is down significantly from where it was last year and the year before. Usually we start to see it tick up towards the end of the summer and in the fall, but right now we're continuing to see it drop off. And they're saying this is due to the pandemic. I don't love that reasoning. I mean, of course, with the pandemic, there's just crazy stuff going on, but with shutdowns coming again, like my state, Michigan, just shut down again. With that happening, demand is lower, and these tankers really need a high supply and high demand. So I don't love this company going forward. I don't love their earnings. I don't love their debt. I don't love what they're doing necessarily with their dividends. And one other thing that I've noticed was on the NAT report, they did not talk too much about Q4 guidance, what they're expecting, what their booking rate is, what they're looking at in Q4. I mean, they talk about how the stock is going upwards. But if we look here at one of its peers, this is Scorpio Tankers Investor Report, and this is from about 2 weeks ago, and they give Q4 20 company guidance. So they talk about the amount of days that are booked as of November 5. They give each type of tanker there and the amount of days it's been booked from 50% to 47% to 63%. And they give the average daily TCE revenue for each of these carriers. So this is something that I would really like to see if I was looking at NAT, if I was really wanting to invest in NAT. There are other tankers out there that are giving guidance that look a little bit more attractive, I would say. Personally, I am not buying into the company. Some people are, but we can see that over the last 6 months, it's just been a steady decline. And I just don't want to buy into this company, even with a high dividend yield, with the amount of debt that they have and with their forward guidance and everything like that. It's not the most attractive company to me. I don't love that the CEO is talking about how NAT is going upwards when they just had a terrible quarter. I mean, the worst quarter of the year. I think that that's not great, and the fact that they continue to sell off doesn't make me super excited about the stock either. There are so many other stocks that I find exciting that pay nice dividends. I've talked about them in my dividend series. I have 9 different companies in there that pay dividends, and NAT is not one of them. So even though they have a nice high yield right now, I am not buying in. So let me know your thoughts below. If you guys want to see an interesting company that I think is really exciting, you can check out my video here from yesterday where I talk about Teladoc, which is a company that ARK Invest, one of the most innovative companies, is buying. So thank you guys for hitting the like button and checking out WeBull, and I'll see you in this video right here.